When it comes to investing, there is a world of options, from the tangible like gold and real estate to the more abstract like stocks and bonds. But which one is the best? Let's break down the different asset classes and see why I've chosen stocks as my primary investment. Asset classes are broad categories of investments. Let's start with cash. It's the most liquid but also loses value over time due to inflation. Then we have real estate. It's a tangible asset with potential for appreciation, but it's also illiquid and comes with maintenance costs. We have gold and commodities. In periods of trouble, we see gold prospers. And commodities, which are very cyclical and very sensitive to economic cycles, can be very risky. Bonds are essentially loans to governments or corporations. They offer a fixed return, but that return can be lower than inflation. And finally, we have stocks, which represent ownership in a company. They can be volatile, but they also offer the potential for significant returns. To understand the future, sometimes we should look into the past. So let's look into the last 200 years. If you invested $1 200 years ago, now that $1 in cash would be worth less than 5 cents. You would be losing your purchasing power due to inflation. Instead, if you choose to invest in gold, for example, that $1 would be worth $3.64. It's a 3x less than that, which is not great. It's an annualized real return only 0.6%, but at least you will be maintaining your wealth. Then, if you choose to invest in bonds, for example, $1 would be worth $1,746. It's a compound annualized real return of 3.5%. It's not a lot, but during 200 years, compound interest working, it's worth a lot more. And the major winner in the last 200 years has been stocks. If you invested $1, only $1, after 200 years ago, that $1 would be worth $1.6 million. Of course, there is a lot of compound interest working during 200 years. 200 years is a long time, and the world is always evolving. So we should look into most recent data as well. So, for example, let's look into the last 40 years. In this table, we can see the performance of US large cap stocks, small cap stocks, emerging markets, international markets as well. You can see bonds, gold, cash, and even REITs performance. And some things have changed, others don't. And the major performer or the best asset class performance in the last 40 years was stocks, especially US large cap stocks, which compound around 8.3% per year. US small caps 7.4% per year, and emerging market stocks have been performing or compounding at a rate of 7.1%. Even though they have been underperforming the last decade, they still have a good performance in the last 40 years. At the bottom of the list, the worst performant asset class were international bond, only compounding 2.5% a year, gold compounding at 1.9% per year, even though better than in the last 200 years. Cash is only compounding at 0.4% per year, which is lower than inflation. After analyzing this data, unsurprisingly, stocks come on top in terms of poor investment returns, while bond and other assets lag behind. We can conclude that higher risk leads to higher return, of course, when you have a long-term horizon. So, sometimes not risking anything can be riskier. I'm not saying the best way to invest is to increase risk or invest in riskier asset classes, because that will depend on your time horizon. If you want to invest for the next 5 or 40 years, it will depend on your age or retirement age. I'm not saying you should invest in crypto, for example, because for me it's not an investment, it's more like speculation. In conclusion, we came with a winner on top. Stocks can be large cap stocks, small cap stocks, international stocks, emerging market stocks, but stocks always came with the best returns when we have a long time horizon. With stocks, you have the potential for higher returns, ability to participate in economic growth, opportunity to own a piece of great companies. But of course, there are risks involved. And before you invest in stocks, you always have to do your due diligence. For me, I particularly like to invest in stocks because I want to maximize my probabilities of success in order to have the higher returns possible for the long term. That's my video for stocks and why I invest so much in stocks. I hope you like this video and please like and subscribe. See you next time.